A failing real estate sector, weak currency, and idle industries. This is how the new China looks like. Surprised yet? In this video, we're breaking down why China's economic slowdown is becoming an unbeatable problem. As the country loses its grip over the housing bubble and tumbling currency, the CCP is in trouble. And well, it isn't helping its case either. Will China lose the de-dollarization war before it's even begun? Let's find out. First, let's talk about China's economic slowdown. Here's the thing. We're probably getting tired of hearing about China's economic slump every other day. It's a given, of course. China's post-pandemic economic recovery has been painfully slow. When the CCP officially kickstarted its industrial units after its controversial zero-COVID policy, it was expected that China would have a smooth economic transition. Now that didn't happen, did it? In mainland China, local consumerism dropped considerably. Citizens, who were trapped in their homes for months, didn't go and made big purchases. That alone shocked the economic experts. Yet it's also safe to say that China has effectively recovered from other big economic slowdowns too. Back in 2008, the global economy was under immense pressure because of the economic meltdown. Then again in 2015, the capital outflow scare once again rattled the world. However, China was able to recover from an economic depression against all odds. The CCP's biggest strategy to mitigate the crisis was to rapidly boost its infrastructure investment. Yet we can't expect Beijing to pull through the 2023 economic slump. There are two very important reasons for that. First, the Chinese Communist Party is under immense debt due to their unplanned infrastructure investment. And secondly, China's housing bubble has burst for good. It's perhaps hard to believe, but the country's property sector is plummeting. But the reality couldn't be harsher. We will talk about the property crisis in the country later in the video. As it stands today, China's two main economic sectors are not faring well. In a nutshell, the government has exceeded its investment constraints in infrastructure, and no one wants to buy a new house. In this scenario, China's saving grace is high household consumption, which seems to be at an all-time low. During the pandemic, the working class of the country suffered largely because of low wages and high inflation. In fact, during the last 2 years, China's response to unfair minimum wages has been non-existent. So it's not surprising that economists don't see the CCP meeting its growth target of 5%. Not without fiscal stimulus, at least. And figures are alarming. In shocking news, China's industrial output is slowing down too. So what's happening to Chinese industries? Back in July 2023, China's industrial production increased by 3.7% from the year 2022. Now that sounds like some progress, right? Well, perhaps on paper. What this statistic doesn't consider is the fact that China had seen a sharp increase in industrial output in June 2023. According to China's National Bureau of Statistics, industrial output has increased by 4.4% in the month of June alone. Within a month, the figure had dropped at an alarming rate. As it stands, by August 2023, China's industries aren't exactly managing high sales and consumption. At large, the Chinese population doesn't seem interested in buying durable, furnished goods, as well as apartment buildings. Now that's a huge problem. For years, the CCP has maintained its economy through large-scale industrialization. The country has built one of the finest industrial units to keep up with large local demand and to control the global supply chain. Yet the new statistics show that China is rapidly losing markets both locally as well as globally. Back home, the only efficient sector of the economy seems to be infrastructure construction. And well, that's about it. Not to mention the country is lagging behind with its technological consumption too. Pretty ironic, right? The general global trends put China at the forefront of technological growth. From producing lithium batteries to assembling iPhones, all eyes are on Beijing. What you don't know is that locally, Chinese industries are struggling to sell personal computers. You heard that right. In the year 2023, the production of personal computers dropped by 22.3%. Such figures seem unprecedented. But the reality is that China's technology-based economy has been in a slump since 2021. And 2 years later, it's still trying to recover from the pandemic degrowth. At this point, perhaps the most important question to ask is why aren't people buying stuff? Seems like a bizarre question, but this is exactly what economists are trying to figure out. One reason for low household demand is rapid unemployment in Chinese youth. The year 2023 brought a whole new focus on the CCP and its incompetence in producing new employment opportunities. To put it simply, China's increasing unemployment rate became global news. In post-COVID China, many university graduates can't bag themselves a job, mainly because industries aren't hiring. Their financial statements aren't allowing them to hire skilled graduates. To state the obvious, unemployed youth won't be interested in buying a brand new flashy laptop. Let us put this impact into numbers for you. In 2023, China's unemployment rate for youth between ages 16 and 24 hit 21.3%. If you're thinking those are some record-breaking figures for China, you aren't far off. Given these dangerous times, it's no wonder that construction companies in the state aren't selling properties. It's official, China is under a housing crisis. On August 14, 2023, Reuters reported the following. China's largest private real estate developer, Country Garden, is seeking to delay payment on a private onshore bond for the first time. The latest sign of a stifling cash crunch in the property sector, piling pressure on Beijing to step in. This piece of news alone sent economic gurus into a frenzy. So let's simplify this, shall we? Chinese real estate companies are rapidly losing money as they fail to turn any profits. This cash crunch means that Chinese builders are garnering more dollar debt than ever before. In the last 3 years, real estate companies have invested heavily in protecting the housing bubble to no avail. As the profits plummet rapidly, companies are defaulting on payments to private entities. It's not surprising that within 24 months, 53 real estate companies have collapsed. Overall, the sector has lost more than 7.9% of its investment in the first 6 months of 2023. This particular trend has been visible in the Chinese economy since 2021. And yeah, it's only going to get worse. Here's why. Recently, Country Garden reported a loss of $6.7 billion in the first half of 2023. $6.7 billion. No wonder why the developer can't follow suit with bond payments. To be fair, Country Garden was hoping for the Chinese government to stimulate the real estate sector. After all, it had seen this film before. The CCP has poured in exponential amounts of money in infrastructure investment, including making big bailouts. However, the government has been super slow in saving 1/4 of its economy, aka the real estate sector. It's true that the CCP has made a promise for a stimulation package. The only problem is that words can't speak louder than the actions, or it's a do-or-die situation for developers like Country Garden. Yet the government isn't showing any direction to fulfill its promise. Meanwhile, Chinese consumers aren't interested in buying houses. Their complaints against soaring property prices went largely unheard. Plus, big delays in the completion of housing projects made people upset as well. Do we think these problems are going to be solved in the near future? Not likely at all. And it's pretty shocking. If there's any economic sector in China that deserves saving, it is perhaps real estate. After all, it makes up 30% of the country's total output. And it works like a charm. For years, the property industry has given China large GDP boosts. Now it's the government's job to incentivize the public to buy properties by fixing problems like unemployment and bad wages. The stunned real estate sector is actively hurting China's GDP. In the second quarter of 2023, China's GDP growth was only 6.3%. Many economists had predicted the figure to hit at least 7.1%. Yet thanks to the government's slow response, that didn't happen. The truth is that the CCP can't afford to make such mistakes anymore, especially when the Chinese yuan is facing external degrowth too. Now, lastly, let's talk about why the yuan is tumbling. It's not a secret that China wants to de-dollarize the world. Thanks to the BRICS coalition, the CCP is trying to strike bilateral trade agreements in a non-dollar currency. The first preference for a substitute currency is obviously the Chinese yuan, a currency that's tumbling. Not a great image for the great de-dollarization campaign, right? In August 2023, Bloomberg reported that investors fear that the Chinese yuan will tumble to a new low. Such headlines are absolutely lethal for the Chinese government. After all, it's in the middle of a currency war of our century. For many years, the CCP has tried very hard to keep the yuan stable to attract investors and earn high interest rates. And well, that has yet to happen in a meaningful way. According to NASDAQ, China's new bank loans in July 2023 tumbled 89% to 345.9 billion yuan, or $47.8 billion, from June, as other key credit gauges also weakened, even after policymakers cut interest rates and promised to roll out more support for the faltering economy. This piece of news is important for two reasons. First, it's becoming pretty clear that major investors don't want to deal in yuan, and once they refuse to do that, China's state bank is going to be empty-handed. Loan slumps and low interest rates won't help the de-dollarization at all. But then secondly, a weak yuan also means that China's exports are also losing their global prestige. At the same time, as China's industrial output becomes low, it's cutting its imports too. Perhaps it's the right time to admit that China's economy is dangerously bad, and the fact that China might as well lose its de-dollarization war. As the new markets and other supply chains open up, consumer markets aren't very excited to buy from China. One reason is the country's unstable currency, which makes bilateral trade risky. Plus, the CCP has begun to feel immense pressure as well. The quickest way to save the Chinese currency is just a stimulus package. And well, the CCP is forcefully spending money on saving its currency repeatedly. The process is getting tiring. But then again, how else do you help a sinking ship? Do you think China's economic slump will continue in 2024 too? Let us know in the comments below. Make sure to watch our next equally informative video.